Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the daily FX walkthrough. We're going to get started in just a moment. What I'm going to do tonight is go through the charts and review levels set forth by Jamie Setley in the latest technical report by him at DailyFX.com. So let's go ahead and pull up the charts. The first chart is the Kiwi dollar. If you recall during yesterday's report, and all previous reports are located directly above this video if you're viewing this video on the Daily FX forum. If you're viewing this video on DailyFX.com, you'll notice that the image is very small. You can click where it says full article, and that brings you to another page where you can actually see the full screen video. So I suggest you do that if you can't see the levels. Anyway, back to the charts here. That 57 area is where I was looking for an entry, which I did in fact get. I believe my print was about 57.11. I placed my stop at about 56.40. So we could see what happened here. Prices did initially rally off that 57 area to about the 57.50 area. I didn't exit. My limit was 58.11, 100 pips above my entry point, as I mentioned during yesterday's report. But we could see what happened here. Prices then fell back beneath, did not hit my stop at that 56.40 area, but that short-term support line was violated. Then we had a massive spike to the upside. I was not watching the market at this particular time. Prices did not get to my limit. They missed it by just a few pips, but that's what's going to happen in the market. And your evolving as a trader, and this is one of those things, excuse me for that, this is one of those things for that. Like, I missed exiting this trade. It would have been, a perfect exit by just a few pips, but it doesn't have any effect on me. And that's sort of the way that you have to trade. You have to treat the market movement. Like, I don't look back. I did exactly what I wanted to do in this trade, and what are you going to do? Prices missed your limit by a few pips, and that's okay. It all evens out in the long run as long as you're entering with good risk reward in the trade. So anyway, moving forward now, this is a hideous candle to the upside here with a sharp reversal to the downside. So now at that 56.77 area, personally, I'm looking. I might exit this trade within the next hour or so here, only because liquidity is drying up, and also because of this hideous candle to the upside, which left behind a very long wick, which is a bearish signal for the pair moving forward. So that's what I would recommend. So if you're in the same position I'm in right now, I'd recommend exiting the trade and just enjoying the Christmas break. Next chart is the Aussie dollar on the daily chart, and this is the support line that I've been using for the past several sessions. This would still be valid. This is what I'm looking for over the next few days. Ideally, as I mentioned yesterday in yesterday's report, I'm looking for a gentle move downwards in all of these, in the Aussie dollar, Euro dollar, Kiwi dollar, and pound dollar over the next several days, and then possibly a bottom just before New Year's, or maybe even on New Year's Eve. So that's a scenario that I have in my head. It doesn't mean I'm going to be right, doesn't mean I'm going to be wrong. That's a scenario I have in my head, so I'm going to see if that unfolds over the next week. And if it does, I might get a little bit aggressive on New Year's Eve, because that's my scenario, and if things are working out the way I expect them to, then I can get aggressive because I seem to be in sync with the market. If that's not the case, then I'm not going to enter a trade on that New Year's Eve or next week, depending when the technical levels are hit. The next chart is the Euro dollar. Same thing here. We can see that reversal at the 61.8. What I want to do now actually is reverse the fib levels here. And give me one moment here. And so this is what we would be looking for. We can see prices did bounce off. That is the 38.2 level right here. These are the shorter term daily fibs. So moving forward now, and again I'm drawing from this low to this high, this is what we can look for. I personally, maybe a move down, as I was mentioning yesterday, to that 38 area, maybe down to the 37 figure. The 50% is at 135.32. So I mean, just looking at this chart now, I really don't know, and I'm just going to wait to see next week, kind of see what happens. If prices come down to that 50% fib, what I'm going to do essentially is wait to see how the market reacts towards when it gets close to these fib levels. Ideally, what I like to see when prices come down and hit the fib level, and let's see let's say that over the next couple of days, prices come down to that 50% level. What I would like to see, that 50% level is at 135.32. I would prefer to see on an hourly chart, let's say, prices exceed that 50% fib level within that hourly candle and then close back above it, leaving behind a long wick, similar to the Kiwi dollar wick that was left behind just a few hours ago. That's something that I would like to see that would confirm the fib level where we might enter. But again, it's a little early right now. These levels are about 300-400 pips away, so it's something we can keep on the radar screen. The last chart is the pound dollar, and this is what what Jamie mentioned in his report, and I'm also in agreement. What I would like to see in this pair is that inverse head and shoulder pattern possibly forming, and that would mean I'd start paying attention here for as soon as prices do break that 46 figure. That's what I would be looking for over the next several days, and right now prices are at 147.68, excuse me, 147.46, so that's only 150 pips away, and we can, certainly in the past few weeks, volatility has been extremely high, so that's not out of the question. So this is something that I would look for, certainly to enter a trade either tonight or towards the end of this week, would be that inverse head and shoulder pattern just below that 1.46 figure. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.